Aloha, this is Joshua Hayes at BigWaveTrading.com coming to you with Friday's market wrap. I don't know if I made mention in yesterday's market wrap or if I said it in the chat room or if I did both, but I said that we could easily wipe out all of yesterday's gains and then some after hours with the Dell report. Well, that is exactly what we did. Today we can see the NASDAQ rally up against the 200-day moving average line on lower volume. It then hit here on almost the exact same volume. On RevShark's website, I see higher volume. TCNet has lower volume. But whatever the case, it's still the same amount of volume day to day. And as you can see, the stock was up 29 yesterday, down 44 today, down 1.83%. Not a good day at all to fail right at that resistance point. And that just goes back to the longer term chart of being in a downtrend since November. On a weekly chart, you can see that there's still higher red volume and more red volume bar days than there are green days. And as you can see, when it rallied, volume fell. Volume continues to fall, but when stocks fall, they can fall really far on low volume. So we're starting to see a downtrend slowly here. You can slowly see a downtrend starting here. Now, if you want to go see a real downtrend, let's go look at some of the other indexes. The New York Stock Exchange, still from the October 31st top, is still in a complete downtrend, and that can be just shown with my arrow going right along the top of the prices or just right through the middle of the trend. And as you can see, it's just down, down, down. That's why it's below the 50-day moving average. And as you can see, the NYSE tried to break out above the 200-day moving or the 50-day moving average. It was successful, but the lower volume makes everything suspect. And like I showed you, the relative strength line is hitting a new low while prices are not hitting a new low compared to July. And so as you can see, this index is severely weakening underneath compared to where it is right now in the charts. Today it fails, but as you notice as it fails, relative strength goes up. Why did that happen? Let's see if the S&P 500 did. I know why it happened. I'm being rhetorical, by the way. That's right. We measure all the S&P 500, but as we can see, the S&P 500 breaks out above the 50-day moving average on low volume on 19-point gain, 1%, 1.5%, sorry, and it fails with a 1.4% loss, down 17, which is more points. Opens lower, closes lower, actually opens near the high of day and closes near the low of day. This is about as negative price action as you can possibly get on an index. Volume, it looks like, was a little bit higher. I saw it a little bit higher on Webb's website too. So that's distribution, but it's distribution from a retail crowd. It's not a big deal. Let's look at the Dow Jones Industrial Average. Basically, this isn't just like all the other averages. The New York Stock Exchange, S&P 500, it's in a downtrend since a major October top. And as you can see, it once again did what the other indexes tried to do, trying to go higher. It still was higher than it fell today, than yesterday, but look at how much higher volume is compared to the day before. That shows that the retail crowd was heavier sellers, more short sellers, just coming in to sell more. This stock also did the index also did the exact same thing, opening at its high of day and doing nothing but going lower all day, closing pennies, nickels, dimes off the lows a day. So this is very negative price action overall. And on there, it looks like it went through the 50-day moving average, but we know it didn't. And it's pretty negative. Bottom line, it's in a downtrend. I want to look at some of the industries that did good today and just show you how weak the market is. According to the Morningstar Industries, one of the top industries on the day was resort and casinos. And as you can see, it's a beaten up sector. It's not an uptrending sector at all. Another one was residential construction. If we take a look at that, we can see that it's just flattening out, trying to base out, but not really. This is a horrible base, as it's very V-ish. It's not very round. It's kind of choppy on the way down. Bottom line, it doesn't look too good. Another one that's going up are regional banks, and that's always a bear market indication. They go higher whenever we're in a or bear market. And as you can see, this is still in a downtrend. Here's a weekly. That's ugly. We go to another one that's leading right now, and it's also just now bottoming due to all the bank carnage. So we don't have anything that looks good. The only sector that's leading that interests me today was the security software stocks. And let me pull up a chart on that. And as you can see here, it's on a weekly even. It's in a more uptrend from 2003. So they continue to do well, even though recently they are in a downtrend. It still looks like it could be rounding out with some major volume. So stocks in the security software and services could be doing well. I'm going to go ahead now and show you what's destroying the market or leading down the most today. And it's not very good because it's tech stocks. And tech stocks are what you want to see lead in bull markets. You can see the semiconductor memory chips. They're just in an ugly downtrend. You can now look at the computer hardware stocks. They are just in another ugly downtrend. Not as severe, but still, it's not positive. These are not bullish charts. They would be trending up if they were bullish. Another place not doing well is semiconductor integrated circuits. These are in another severe downtrend. Look at this from the 2000 top. These are what made us have major runs in the 90s, and now they're doing terrible in the 2000s. So this just confirms that the market is not ready to rally. Another horrible index is the semiconductor equipment and mate stocks. Here's another very ugly downtrending daily chart since the top, and even on a weekly and further out you can see it's not pretty. They led us in the 90s and they're lagging us now. And until these stocks start doing well, I'm sorry, you're not going to have a very powerful bull market. This was starting to, personal computers was looking good until today. Dell helped destroy this sector. So another sector that was starting to look promising, but now no longer looks promising. And as you can see from the 2000 top, they're lagging. And once again, they were ones that led us in the 90s. And as you can see, we went up in the 90s on these stocks. And we kind of go nowhere. And that confirms our indexes. And don't forget, from the NASDAQ from the year 2000, we still haven't hit the top yet. And we're selling off now on heavy volume on weekly charts. Look at 2007 to 2008. That's some heavy volume compared to what we even ran up on from 2000 to 2007. The long-term picture tells the truth better than anything else. I'm not a short-term day trader, and if I was, I would only be looking at the short side of this market. It doesn't look good, and it's sad. I'm very sad. This is the complete opposite of the 90s, and I started in 96, and that's just unfortunate. I wish I was born a few years earlier, then maybe I could have been a part of a great bull market. But as you can see, from 2000 top to now, we are still somewhere around 50% off the highs. And who knows if we'll ever get back. Who knows if 2000 was the top. I hope not. But I tell you what, this distribution that we're seeing recently around the July, April, September months of 2007, the October, November, December months of 2007, and especially the early months of January are not bullish. We don't have volume confirming it to the upside. And I'm going to go ahead and end it, part one there, and just show that there is at least one good thing about the NASDAQ. It's showing positive relative strength compared to the trend of its actual market. So that's a good way to go. I know I screw up and call these stocks a lot, but to me, they are just like stocks. But I hope you learned something from part one. Part two, I'm going to go into some stocks that we're moving around today. Thank you very much. This is Joshua Hayes at BigWaveTrading.com. And once again, I hope you learned plenty, as we say in Hawaii.